For years, Zuckerberg's superpower and weakness were the same thing. He could bet Meta on any ideas that no one else believed in. But since 2025, something has changed. The idealist who charmed developers and users is suddenly gone. In its place, a capitalist CEO prioritized shareholders and fund managers. So in this one, I will cover the following questions. First, where did Llama go? Is this the beginning of the end for an open-weight AI? Second, is Meta really preparing to sell compute? How serious is Zuckerberg about this? Third, is enterprise AI becoming the next Meta business? And finally, what should we look for in the next earnings call? But let's start with a little history so you know why this is such a big deal. Why was Meta a cornerstone of software? To understand why the shift matters, you have to remember how Meta used to earn its loyalty. Meta was much more than just the social media empire that sells ads. It was the company behind many serious open source projects, not an exaggeration to say that it's a cornerstone of today's software. Because the world without open source will be slower, costlier, and have fewer innovations. React, for example, a default interface language initiated by Facebook, or PyTorch, the language that powers flexible, efficient, modern AI, originated at Meta. In the Q2 2024's earnings call, Zuckerberg believed the same approach that used to work for React and PyTorch will also bring Llama to become the foundation of AI. Here's what he said. This approach has consistently worked for us, and I expect it would work here with Llama. In his dream, Llama should not be locked in a single cloud provider, and developers should be able to use Llama anywhere, any way they want. Though that the same founder logic also showed up in a pricey way. For example, Meta's CFO warned investors in the late 2021 that the Reality Labs alone would reduce the operating profit by approximately $10 billion. A bet that still hasn't paid off. And unfortunately, Llama is the AI version of the lost bet. By year 2025 and 26, Meta's vocabulary has changed dramatically. If you read their earnings transcription like I did, you would find less open, community forward, and less ecosystem, but much more talking about returns, growth, and superintelligence. Where's Llama? The word llama was mentioned 19 times in the 2023 earnings transcript, however, now 0 in the Q1 2026 transcript. So what happened? Meta had already proven that this model works for software time and again. So why stop now? For this, you need to understand some fundamental differences between AI and all other deterministic software, code libraries like React. The open source with these kind of code libraries really create a real feedback loop. Anyone can inspect the code, fix bugs, and build libraries around it. And they can also teach other developers how to use it proper. The community really contributes and improves the product as a positive feedback. So when React becomes the default framework for any professional web project, Meta actually benefits 3 times from it. To start with, the ecosystem just gets better as more people build tools around it. And second, Meta is in control of the standard, and they became the ultimate beneficiary of it. That leads to engineers whoever arrived and worked in Meta already familiar with the tools that came out of Meta. But why did this model fail in AI? In essence, if open source is about collaboration and community, the nature of AI hinders both. So what do I mean by that? To start with, very few people can meaningfully retrain or improve the base model apart from the company who owns it, which means there is no way to treat an AI model, especially a frontier one like the standard library where a developer can submit a patch from their device. Or improving the model itself requires enormous of resource that only hyperscalers like Meta, Google, and Alibaba have. Now, secondly, when we start to talk about debugging, it's easy with traditional software. However, red teaming with AI can expose problems, yes, but in reality, no one, not even the AI labs, have the means to fix those bugs. Similarly, inference optimization can make development cheaper, but again, the base model remains in control by whoever that has to compute the data and the capital to train the next one. Basically, With AI, the community isn't in control at all and doesn't have the means to improve AI as it did with any open source libraries. Developers can only do things around the model, such as tooling, fine-tuning methods, and developers' adoption. Just think OpenClaw or Cursor or any web UI to provide an easy chat interface with those models. Those things, yes, matter. However, they aren't the same as improving the core model itself. So, the open source dynamic is really weak if it's not impossible for AI, the interchangeable nature. Now, let's zoom out to the AI economic level, because AI models are becoming increasingly interchangeable. Just think AI as broadband and labs as the broadband providers. As long as you didn't sign a 2 to 3 years contract with those AI labs, you can switch at any time to a provider that promises cheaper and faster access. And some companies have already slowly learned not to build too tightly around a single model because of all the obvious downside I have pointed out in this Kidnapped by Anthropic video. So with the existing infrastructure, developers can route through tools like OpenRouter, which allows them to switch from one model to another for better quality, lower latency, or just lower token cost. Hence, the competition between the AI labs is fierce. And because of the nature of these kind of competitions, the ecosystem drives the commoditization of those AI models really hard. Where model routing makes sense for users and companies, it certainly weakens the strategic value of having open weight model like Llama, given there is no incentive for anyone committing to locking into Llama. Meta will never get the same ecosystem advantage as they did with React. So put simply, if there is no path to return or long-term benefit to justify maintaining public models, just think about all these costs: the safety debates, developers' relationship, open source positioning, and so on. All take real effort, and effort means people, which ultimately means money spent. This fully explains why I can no longer find keywords like openweight, open, or llama in the latest earnings transcript. And because cutting back is the only rational decision on an investment without return. So if llama is the first clue that the old philosophy is no longer valid, the real pressure to Zuckerberg comes from CapEx. Once the infrastructure spending reaches this scale, compute stops being just something that Meta uses internally. It becomes something that Zuckerberg and Meta has to justify to their shareholders. By the way, I read their last 4 years earnings transcripts, so you don't have to. Subscribe so you get substance like this every week, inspired in a world full of AI content. Compute stops being just Zuckerberg's bet. Before we start discussing computes, that I think we should address a shift in mindset. A public company is ultimately run for the shareholders. Even with 61% of the voting power from Zuckerberg, shareholder value is still not decorative and can't be ignored. Having every major fund owning a piece of Meta, Zuckerberg eventually has to bend to shareholder pressure. So if at some point investors stop believing, they sell. And the consequence of it is that if stock falls far enough, it doesn't just make Zuckerberg paper poor, it also makes the business harder to run. Stock-based compensation becomes less attractive, acquisition becomes much more expensive, raising capital gets harder, and so on. If it gets worse, ultimately it hinders companies' strategic flexibility. So there is a limit to how many of the trust me cards that Zuckerberg can play. He has made huge bets and failed hard, such as metaverse, AR glasses, and as we just talked about, Llama. Some of these are still available as product, but really none of them show enough traction to justify the CapEx. So after enough giant bets with delayed payoff, the market start asking this real simple question: when will we see the return? And Meta spending is now too large for that question to be optional. Its CapEx grew from $15 billion in 2022 to forecasted $145 billion by the end of 2026 by invested in servers, data center, and network infrastructure. Now, if anyone outside of Meta is willing to pay for GPU capacity, that creates a point of reference. Then all internal users have to compete against this point of reference. We're talking about ad ranks, recommendations, Meta AI, business agents, frontier models training, and any internal productivity tools as mentioned. So Zuckerberg is now forced to answer this. Does this internal use of compute create more value than selling the same capacity to someone else? This dynamic changes the nature of the spending. Compute is no longer only a cost center at Meta. It becomes an asset that can be monetized and be assigned to a market-based price. What did Meta originally build the capacity for? From year 2022 onward, Meta's stated rationale for the data center build-out was not to serve external need, but the ranking and recommendations, the ad systems, the generative AI training, the frontier models, and more. Until the end of 2025, the story was always Meta needs enormous compute because its own products are becoming AI systems. How the cloud strategy has changed over the last 3 years. More than once, Zuckerberg has been explicit that he doesn't plan to run a cloud business. For example, in Q2 2023, Zuckerberg stated this: "We partnered with Microsoft explicitly because we don't have a public cloud offering, and this isn't about us getting into that. It's actually the opposite." Even in mid-2022, Susan Li, their CFO, was still drawing the line around the internal use. She said, "So at present, we aren't really thinking about external use cases on the infrastructure." Then, 3 months later, in the earnings transcript, October 2025, Zuckerberg says something very different. Almost every week, people come to us from outside of the company asking us to stand up an API service or asking if we have different computes that they could get from us, with no definite rejection as they used to 2 years ago, hinting that they were considering cloud service as their offering. So the strategic question now becomes, is this going to be a cloud business or just optionality? If Meta wants to become a real cloud/infrastructure provider, it really needs more than just spare GPUs. It needs pricing, support, reliability, commitment, sales motion, developer toolings, and some version of enterprise account management. You don't just become AWS because you have extra capacity to spare for a few quarters. Yet, if Meta only wants to monetize temporarily overbuild, the logic is the opposite. It wants minimum investment and max the tenancy rate. So when internal compute's demand catches up, Meta can pull the capacity back in the shortest possible time. So to properly analyze this, we'll need to quickly look at its cash cow and what it lacks. From distribution channels to cloud business, Meta's old business was an attention hub and a distribution platform. It owned the consumer's attention, and then businesses paid Meta to reach users through advertisements. Meta never went inside a customer's companies and rewired how the business worked. It sells reach targeting, measurement, and conversion, and their customers did the rest themselves. The cloud and AI, however, are different. As I said, if Meta overbuilds, the simplest version is to rent capacity. That could mean raw GPU access, hosted model access, or API access, or even the bundle of all three. Now, let's look at the scenarios of GPU access only. The easiest path here is basically to learn how SpaceX does to rent their capacity to Anthropic. Watch this video if you want to learn more about it. But basically, it's to find one huge AI lab tenant and let them absorb a big chunk of your spare capacity. And that's the landlord's approach. It's more than just clean because in this scenario, Meta has limited clients to manage, and the most importantly, it is so much more flexible if Meta still expects the internal needs to catch up. Hosted model access and API. So here's a more complex and less flexible option. Basically, is to sell both cloud and AI, essentially to compete with the likes of Google and AWS. And why is this one more complex, you ask? Because you cannot just show an enterprise customer a cloud or AI product and assume that adoption happens like this. Enterprise AI needs platforms, models, tools, governance, support, migration helps, and also help with their integration. So if Meta wants companies to use its AI tools, it needs so much more than just a product page. On top of this, the company's language has shifted from Llama, what we just talked about, an AI model that's facing the developers community, towards Meta Superintelligence Lab, Muse/Spark, business agents, and more controlled AI products. With all these new packages create a new problem. that someone basically has to buy and use them. In AI, that increasingly means forward deployed engineers. Basically, you need to have a team of people who sit with your customers and then turn the vague, we need AI ambition to real workflow. But on the upside, if they go with this route, it will also create actual usage because the customers would need AI in their CRM, support commerce, finance, compliance, and internal toolings, which translates into token use. Token usage translates into compute demand, and compute demand justifies the data center. All that said, in the Q1 2026 earnings call, the evidence still points more towards optionality than full cloud commitment. Here's what Zuckerberg said. If we haven't done that yet, but obviously if you got to a point where you overbuild, you could have that as an option. As an evidence, a few weeks after that, some media started to report that they have already allocated significant personnel to oversee these divisions. They didn't just say that Meta is building Meta Compute as a landlord. They also named some people appointed to oversee the enterprise solution division. So if you put these two together, the Meta Compute plus the enterprise solution makes this initiative a lot more serious and a long-term commitment than it sounds. Either way, this is a very different Zuckerberg. The old Zuckerberg made giant internal bets and asked investors to wait. The new one seemed to stop everything that doesn't generate return. Instead, it focuses more on justifying CapEx and on leveraging unused compute in an unseen by Meta way. All of which are signs of Zuckerberg being a responsible CEO rather than what he was used to, a hot-headed founder. By the way, before we continue to the most important part of this video, what to watch next, be a friend and share this video and hype this so more people can see it. What to look out for. As we talked about in the last few videos, the model layer alone really has no clean earning paths and it keeps getting pushed towards commoditization. And in the meantime, same as other established players, Meta has a real edge. It has ad revenue. It arguably has the best large language model AI use cases on Earth, AI tailored ad experience, something I talked about a year back. But even that, Zuckerberg, like all CEOs, understands that Meta can't just live on its past glory. I admire his attempt on Llama, but the only play that won't lose investors' heart is a clear revenue path. With the current circumstances, it means selling infrastructure, distribution, or workflow locked in around the model. So in the next few earnings call, I will keep an eye on the following questions. Let's start with the first one. We should pay attention to the language used to indicate whether Meta still says it's capacity constrained or starts openly talking about utilization and monetization surpluses. In another word, is this moving to either selling excess capacity or we now build a real cloud business? And second, which route are they taking? Is Meta selling raw GPU capacity, access to hosted models, or API access, or the bundle of AI services? Keep an eye on which rumor Meta confirms in the next few earnings call. Most importantly, it will take a year or two to see how this business plays out. If it's just selling raw GPU capacity, the prep work is minimal. While Meta is still a year behind their opponents though. But if Meta is going after the likes like Azure and AWS, the game is so much more complex for them. Again, like more clients, more services, and more infrastructure for them to build, which put Meta probably 10 years behind established players. So which path do you think Meta is more likely to take? If you liked and enjoyed this video, please do subscribe and share and watch this next.